Yes, let's welcome on board then the management of Polycab, and we have Inder T Jaisinghani, the chairman and MD at Polycab, as well as Gandharv Tongia, the CFO, are joining in on the show right now. Gandharv, if I could start off with you, prices of copper and aluminum have declined sharply in June. How much of a benefit did you see in your margins, and what is the expectation then for the second quarter?
Yeah, before I talk about margin, let me give you a broad overview of the quarter gone by. We have started the fiscal 2023 on solid footing. We have registered growth both in B2B and B2C businesses. Our bread and butter cable and wire business has registered a growth of 48%, and FMEG has registered a growth of 59%. As far as margins are concerned, in cable and wire, generally we have hovered between 11 to 13% of EBITDA margin. This quarter also we have maintained that. And the expectation is that in the quarters and years to come, we should be able to maintain the same EBITDA margin range.
Given the fall, will you look to pass on the benefit then, Gandharv, to the customers? And when exactly would it be passed on?
So as you know, we are a distribution play. Almost 87% of our business is done with the help of dealers and distributors. And there, generally, the prices are revised on periodic interval, particularly on monthly basis. And whenever there is a change in copper, aluminum, LME, or USD INR, we generally pass on the benefit or pass on the cost increases to our end customer. And to that extent, we don't expect any significant impact on the EBITDA margins of the company.
Good morning, Gandharv. This is Nayantara. Can you tell us a little bit about the inventory levels? Where do they stand at? And what should the street pencil in? Inventory losses going forward?
No, absolutely not. We have a well-defined hedging framework, and embedded derivatives are included in our procurement contract, and that is why we don't expect any significant impact on the P&L of the company because of increase in commodity prices or falling commodity prices on annualized basis.
Inder, coming to you now. So if you were to look at the product mix and revenues, FMEGs are what? 10 to 12% of your revenue. I was just checking out the math. What is the growth strategy here going forward, and what will the revenue mix look like? What is the intent, at least? Let's not forget about the light electrical peers and the others that you have to compete with.
Yeah, FMEG, our growth is continuously 25 to 30%, which is going to remain. Only we want to see that how we can increase our EBITDA by increasing our network, which work is going on. I think so in coming 4-5 years, we'll see a lot of changes in EBITDA also, because our EBITDA is going to increase in every year wise, every quarter wise.
So Inder, how has the demand been in tier 2 and 3 cities versus the metro cities, and what kind of recovery have you witnessed?
Demand is tier 2 and tier 3 cities are more better, and even rural is increasing in the good demand because agriculture is going very well. So buying power increased by all rural. So demand is increasing continuously.
Okay. And Gandharv, given that export contribution has seen a gradual increase over the last few quarters, what exactly is going to be the strategy when it comes to exports?
Absolutely. Export is one of the focus area for us. 5 years back, exports used to contribute 2 to 3% to our top line. In this quarter, it has contributed almost 6.5%. The expectation is that in the years to come, we should be able to get to almost 10-12% of exports contribution to our top line. We have presence in countries like US and Australia, and slowly and gradually we are trying to penetrate these markets and additionally add other set of markets, including Africa and part of EU.
Gandharv, your company is clearly the market leader and has had a very healthy market share gain as well in the past few years. Do you expect these kind of strong gains to continue going forward?
So you are aware that we embarked on Project Leap, which is a transformation program last year with the help of Boston Consulting Group. We have carried out several activities under 4 pillars. One is on go-to-market. To give you an example, we have integrated our B2B segments, which has helped us in improving our customer serving capability as well as secondary sale visibility. We have added new dealers and distributors. We have added new districts to our network. We have augmented on a product portfolio. We have added new products, including additional products in the premium category. And we have hired senior leaders across the board, and we are focusing on digital enablers. So all these 4-5 things will help us in achieving top line of 20,000 crore rupees by fiscal 26, and Boston Consulting Group is helping us in achieving this.
Right. And also your company has seen a 17% sales CAGR in the last 5 years. What is the target then going forward for the next 5 years?
Our strategy is very clear that we want to cover maximum network and we want to be one of the best supplier availability of all our goods. We have to focus even on FMEG, but it will take definitely 4 to 5 years. Within 5 years, we will see that our total turnover and EBITDA is going to be average more than 70 to 80% more from today.
Yeah, so in the way rightly pointed out, we are talking about 20,000 crore rupees of top line by fiscal 26. In the B2B bread and butter business, we will continue to maintain industry leading growth. And the B2C business, where we have retail buyer and FMEG, we are expecting breakout growth. EBITDA margins will improve in FMEG substantially. And as a result of that, the overall EBITDA margins should improve by fiscal 2026.
Okay, gentlemen, we're going to leave it at that. Thank you so much for joining us here on the show, taking us to the fine print of the quarter that has been. The stock trading lower by about 0.5%. Year to date, the stock is down by about 9%. Well, let's